Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, co-founders, thought leaders, executives, musicians, artists, you name it, in the world of crypto, blockchain, all around the world. And today I have an amazing guest. He is the Chief Executive Officer of Uphold. His name is Simon McLoughlin. Simon, welcome.
Jamil, nice to meet you. Thank you very much for having me on.
You're very welcome. So, I want to ask you first to kick things off is about your background. What is your background, and is it a logical background for what you're doing now?
Yeah, I guess you could say that. I had 20 years in traditional financial services, worked for many years at LexisNexis on compliance solutions, then worked in institutional investment. And I got super interested in crypto because I moved around. I moved from the UK to work in New York. I traveled around a lot in Latin America. And if you have that background, you realize how difficult it is to move money across border. Even today, it's not just difficult for people, it's difficult for companies. It's expensive, slow, and error prone. And I've said this a number of times before. I got hold of a book about Bitcoin when I was living on Union Square in New York, Barnes and Noble, and read it one weekend and just thought, yeah, that's the industry I want to be in. I just thought it was amazing, the notion of anybody with a mobile phone and an internet connection could move value globally without any intermediaries and 24/7. That really captured my imagination.
Awesome. So your company's Uphold, all right?
Uphold, yeah.
What is Uphold all about, and what makes your company unique?
Uphold is a Web3 financial platform. So we help people, companies, and financial institutions move value from fiat currency into cryptocurrency and across different blockchains. We're connected to 26 different blockchains. The thing that makes us really special is we're structured as a prime broker, which means that we have our own inventory. So when you trade with us, you're trading against our inventory. We're the counterparty. And we source liquidity from 30 underlying liquidity venues. And that's a mixture of centralized exchanges, decentralized exchanges. And effectively, Uphold is listening to pricing and quantities right across the market in real time. So as a retail investor, you can be assured of getting a good price in the market because we're listening, polling the whole market continuously. We also offer a very broad range of tokens. We support 280 tokens today. We offer deep liquidity because we're connected to so many venues. When there's an acute event in the market, Uphold tends to be the place that you can continue selling, a distressed asset. We saw it last year with Luna Sea, where Uphold was one of the venues where you could continue to sell way past when some other major trading venues, didn't have liquidity. So liquidity is a big part of our story. And I guess the other part of our story is transparency. So we're the only financial platform that I know of that publishes our assets and liabilities every 30 seconds on a public website. And we've been doing that since 2016. So, as a customer, that we have your assets and your assets are safe and they're available to withdraw at any point. And we're audited by an audit firm with an international reputation, RSM Robson Rhodes. So post FTX, we've done very well because as a transparent, mature business with mature risk controls, we've seen very strong inflows. Because a lot of the FTX story was about you don't know what's going on in a black box. And Uphold is the opposite of a black box. It's fully transparent. You can go to our transparency page right now and see in real time our assets and the liabilities we have to our customers. So, it's a model that's very transparent, offers a broad range of tokens, deep liquidity, and, very competitive pricing.
I saw a comment on Twitter X that was meant as a joke, right? But I'm thinking about it, and it's not a joke. It's, you saw the Kraken lawsuit. This came out by the SEC.
Yeah.
It's also sued Binance. They've also sued Coinbase, and they've made a lot of lawsuits. You so far have escaped the wrath of the SEC. So let me ask you, what are you doing right?
Well, I mean, we're in many ways we're a rather boring company in the sense that we put a huge amount of effort into having appropriate risk controls. And these kind of businesses, crypto businesses, are very complex. There's a lot of complexity to manage, and we've invested very heavily in compliance. It's our second largest function after engineering. We put a huge amount of effort into developing proper governance controls. And if you look at, the chairman of Uphold Europe is a guy called Kevin Lutwick. He's a former 7-year regulator with the FCA. The chairman of Uphold Limited, which is the parent company, is Jim Hilton. He built up Promontory Group, which is one of the most storied names in consultancy in the US for financial institutions. So these are highly experienced people who've helped us develop, a very thorough control framework. A lot of crypto firms over the past 18 months have lost their access to banking partners. And we've managed to retain our banking partnerships because, we're regularly audited, we represent low risk, we go through regular AML and other audits that show that we have a very robust control framework for things like anti-money laundering, proper coin screening, fraud prevention, appropriate segregation between customer and corporate assets. So we put a huge amount of effort into the foundational control infrastructure of the business. And if you look at some of the lawsuits that have been brought, they often really, the real story is often failures of the control framework, and things like lack of segregation between customer and corporate assets, which is just sort of like a foundational principle. You have to do that stuff properly.
Yeah, you do. That's what I thought. The proper audit, proper risk framework. Yep, that makes sense.
Yeah, and we're super careful about what tokens we list. Crypto is a fascinating space because on one hand, there are tens of thousands of projects being built on blockchains. You want to give people access to the innovation that's going on there, but equally, you want to protect them from fraud and scams. And striking that balance is something we take terribly seriously. We have a listing committee. It consists of legal, compliance, infosec, security representation. We reject 70%, at least 70% of the tokens that are brought to the committee. And we regularly delist tokens when the facts change. We do background checks on founders. We make sure networks are operational and appropriately decentralized. Founders don't hold a disproportionate amount of tokens. We take all of that customer protection stuff very seriously.
Yeah, that's good. That's good. I am a Celsius customer, or was. My money is frozen on Celsius, and watching this whole bankruptcy proceeding, all this stuff fighting, it's been a nightmare. So I'm glad that you're doing the proper everything. Appreciate that.
We've it's interesting. The company was founded in the wake of the 2008 financial crash, and I know the founders of the company deliberately built in transparency from the beginning as a reaction to the black box model that had exposed customer money to risks that they didn't understand. And so, right from the get-go, from when the product was launched in 2014, we were fully transparent about our assets and liabilities. And post FTX, that sort of transparency value has really become very important. And, we've seen strong positive inflows for all but 2 months in the last 18 months, which, given the incredibly difficult market backdrop, it's been very, very pleasing for us.
Awesome. So I want to get into something new that you launched, or launched. It's called Vault, right?
Yeah.
What is your latest Vault solution all about, and why is it a revolutionary form of self-custody for the mass market?
Sure. Well, Vault is an assisted form of self-custody. And what it basically gives the customer is a multi-sig wallet where the user controls the majority of the keys. So the user has 2 keys, we retain 1 key. The Vault assets are on chain, which means they're fully bankruptcy remote. Even if the Uphold app is down, you can move your assets. You can do anything you want with your assets. And it's assisted self-custody because the solution is resilient to key loss. So if you lose one of your keys, you can come to Uphold and you can say, look, I've lost one of my keys. You put your remaining key together with our key to create a replacement key for the one that you've lost. And we think that really is pretty revolutionary because Vault is embedded in the Uphold app. It's a custody option you can access from the app. You can move funds to your Vault location, which means they're in self-custody, but they remain adjacent to the trading location. So in other words, with one click, you can pull the assets back from the Vault wallet onto the trading platform and trade. So the days of rummaging through your desk trying to find your key, or digging up a metal plate in the garden trying to find the key to move your assets from us, it's not convenient. It's not practical for people. And Vault basically puts a window on the native multi-sig technology that's embedded in blockchains and has proven to be extraordinarily secure. If you look at Bitcoin and Ethereum, they all use multi-sig wallets, and those wallets have protected tens of billions of dollars of assets. The Bitcoin network has never been hacked. And we know of one wallet belonging to a large exchange. There's $9 billion in that wallet. It's been protected by this multi-sig technology, but the multi-sig technology has been complex, inaccessible, and impractical for mainstream users to access. So really with Vault, we put a very user-friendly window on that battle-tested technology and made it super practical and convenient. So you can pull assets backwards and forwards to trade and at the same time have the ultimate security of self-custody for your assets.
There's a big adage, crypto says not your crypto. And what you've done is you said, okay, you replacement technology to say, if you don't have your keys, you can still have your crypto.
Well, exactly. I mean, fundamentally, Vault says, look, you have 2 of the keys. We only have 1, so we can't do anything with your money with that 1 key. We can't move it. We have no access to it. You, the user, are in control. You have 2 keys. There is no barrier between you and your assets. However, we appreciate that full self-custody, where you have 1 private key and if you lose it, your funds are gone, that doesn't work for most people. And it's not just the risk involved, it's the complexity of using a traditional self-custody solution. Vault just makes it incredibly easy. 1 click, either way, you can pull your funds back to the trading platform or push them to Vault. And equally, rest easy at night that if you do lose one of your keys, you can create a new key by coming to us and putting your key together with ours. We don't think anybody has brought that combination of benefits together in exactly the same way. So it is something genuinely new under the sun. It is spectacularly easy to use. And one of our design goals from the start was survivability. So, if the Uphold app is down, we don't want you to be dependent on us. You don't have to use Uphold to move your Vault wallets. You can go to any compatible wallet and move funds. So survivability was very important. And we deliberately steered away from things like multi-party computation solutions because those make you dependent on the vendor. If the vendor goes away, you're stuck. You need really heavy-duty server-side infrastructure for MPC solutions to work. And for us, that didn't meet our design goal. We wanted something simple, something battle-tested, something super secure, and something that, if our app was down, you didn't need us. You can still access your funds.
Sounds good. I don't even know what a multi-computational, what you said, multi-computational is, but it's cool.
Yeah, it's a very heavy duty, mathematically very complex way of securing a wallet. And there are proponents for it. I think Binance has launched an MPC wallet. But our preference is make it easy, make it survivable, make it independent, so that you're not relying on a vendor to be able to access your funds. Our fundamental belief is there should be no barrier between you, the customer, and your funds on chain, which is one of the fundamental principles of crypto. You're self-sovereign. You can move your money without dependence on anybody.
I love it. I love the idea. So right now, there's still a range of challenges for users when navigating the world of decentralized finance. Right? So what do you think? What do those challenges continue to be?
Yeah, I mean, it's a great point. I mean, look, for the average user, the idea of being your own bank in DeFi, it's simply not practical. There are too many components missing. The problem of identity in decentralized finance hasn't been worked out yet. Today, moving money from fiat currency into crypto is a regulated activity in most major markets in the world, which means there has to be a centralized counterparty. If you look at DeFi, there's been some fantastic innovation there. Decentralized exchanges generally have worked very well. They've eliminated counterparty risk. It's 24/7 operation. But the specter that haunts DeFi is security. Basically, a lot of these smart contracts can be hacked, and for the average user, it's just not a safe space. It's a maturing space. There's super interesting innovation on there, but for the average user, there are still tens of millions of dollars lost. It feels like every week. And until the fundamental problems of security, identity, regulation, all of those things are addressed, fundamentally it's a sandbox. My real point is, until the problems of identity, security. It was really interesting to see the French authorities this week suggest that they're going to introduce a mandatory requirement for smart contracts to be audited and inspected and authorized. And for crypto purists, that sounds horrific. But the idea is not mad, in the sense that if there were an opt-in system and people could have confidence in smart contract code, it instills confidence. But our bottom line is there's still the French authorities introduced a recommendation that the smart contract code is audited and inspected by authorities, which for crypto purists, of course, sounds mad. But it's not such a crazy idea, in the sense that if it were an opt-in system and it instilled confidence, in the sector, it could be good for the industry. But our view is DeFi contains a lot of super interesting innovation, but it's too risky, too complex, and too impractical for the average user. So one of the things that we want to do at Uphold is expose certain benefits of DeFi. And Vault is a very good example. Really, with Vault, we're making self-custody, which is the foundational principle of DeFi, easy and practical to use for the non-technical user. And I remember sitting with the team at the start of the year, and we asked ourselves, what's the biggest problem in crypto? And really, when you think about it, at 36,000 feet, the biggest problem in crypto is it's difficult for the average customer to hold crypto assets natively. So Vault is all about making it very easy and safe and simple.
The DeFi, it's interesting. You talked about FTX. I talked about Celsius. But when you looked at DeFi, and these companies had to pay off their smart contracts, had to pay back the smart contracts, that payment and the DeFi rails worked perfectly. It
Yep.
was the to the central to through CFI to the customers that didn't work at all. You
Yep.
know, so how do you build upon that pieces that worked? Like, and you said DeFi has hacks, but isn't it just the bridges that have the hacks? Like, what are you taking from the DeFi lessons and applying it to make it safer for the customer?
Well, I think look, in most parts of the world, so certainly most developed markets, as I said earlier, moving fiat into crypto is a regulated activity, which means there has to be uh, a regulated party. There has to be a centralized entity in the chain, because fundamentally the way licensing works is you get a license, you have to operate according to your license, and the regulator fundamentally needs somebody that they can hold responsible for wrongdoing. And so a regulated exchange is an essential part of that system. The idea that regulators are going to start regulating DeFi successfully, it's just a long way off. It's just not practical. So at the moment, we're fundamentally we're offering a hybrid model. We're saying, look, here's a CFI platform that's fully transparent, it's fully compliant, KYCs all of its customers, but it gives you super easy access to really interesting concepts like self-custody. We're just making it very simple, but at the same time, we're being compliant and transparent. And we think it's the hybrid model that really is going to get traction over the next 3 to 5 years. Because if you look at blockchain technology generally, you're going to need regulated gateways onto a blockchain. So one way to look at Uphold and Coinbase and other players in this space is we're regulated gateways onto the blockchain. That's the way I think about it.
That makes a lot of sense. I've been saying for years, you can hack an exchange, you can hack a wallet, you can't hack the blockchain.
Yeah, no, I mean, as Bitcoin has shown, right? I mean, it's extraordinary that tens of billions of dollars have been protected by the native multi-sig wallets on that chain. Never been hacked.
Yeah. Multi-sig wallets are just a band-aid for a much larger problem, right? So what is that much larger problem? And how, if we fix that much larger problem, can we onboard the next, million, billion users?
Yeah, I mean, it is a band-aid for a much larger problem. And I mean, the much larger problem fundamentally is lack of trust. There's a lack of trust in DeFi. And it comes down to, lack of identity, lack of compliance, association with rogue actors, lack of security standards in the code. Um, and, I just think we need to throw away a lot of the crypto purist principles and just get real. If you want it to go mainstream, you need to make it easy to use, safe to use, and transparent. And as I said earlier, I think the interim solution is regulated gateways like us that try to embrace the best principles of blockchain, but are not fully on chain.
So the crypto purists would say they have a vision, and that's self-sovereignty.
Yeah.
Right. But you also have the vision of self-sovereignty, except the self-sovereignty, I guess there's a conflict there. How do you see what do you see as self-sovereignty? Why is it important? And how are you an important factor in helping people achieve self-sovereignty?
Well, I think we see self-sovereignty as you absolutely have the right to hold your money on chain in a non-custodial wallet, and you have the right to move it, as you see fit. But we don't associate that with anonymity. So, we won't obviously touch anything to do with mixers. Everybody who's onboarded onto Uphold goes through government photo ID identification. So, we want to create a safe place where people are identified and their activity, their activity is not in any way anonymous. But that doesn't mean that you shouldn't be self-sovereign in the sense of you can move money into into a wallet on chain, and you should be able to move that money on chain. But you can't do that through Uphold, on an anonymized basis. And the compliance rules in this space are fundamentally, you've got a duty to identify your customer, you've got a duty to screen your customer. We can't serve people on, sanction lists. There's a whole bunch of stuff we just have to comply with. And crypto purists would reject all of that. So, that's not the market we're trying to serve, right? We can't serve that market. But we are trying to give people who are happy to, go through regular onboarding and screening processes access to the benefits of self-sovereignty on chain.
I guess I'm a semi-purist. So, I believe an important part of aspect of blockchain is not just banking the unbanked, and what I do is a voice for the voiceless, but identity for the unidentified, right? Is a basic tenet, and that kind of conflicts with, full disclosure and transparency, right? Do you think there's a world that exists where both can come into an alignment and cooperate and work together, or do you think that everything?
I think so. I think one of the major things that needs to happen is regulators need to start employing a lot more blockchain engineers and people who understand blockchain. Because once regulators realize that fundamentally the underlying technology is a positive force in society and can do great things for society, not just economically, not just cutting costs out of businesses, but can be a societal good, then I think it will change the attitude of regulators towards the technology. And our space is sort of cursed with so many conflicting labels, Web3, DeFi, crypto, blockchain. It's confusing. And some of the labels are not helpful. And I do believe that, a major accelerant would be regulators employing more blockchain specialists, so they gained a better understanding of the technology and the benefits it can bring. There's a lot of understanding, a lot of misunderstanding rather, with regulators as to the purpose of crypto and so on, which is unhelpful because it impedes clear rules of the road being set.
I looked at it as the convergence of science, technology, and society.
Yeah. I think that's a great way to look at it. Absolutely.
And the regulators are just looking at it as finance.
Yeah.
So how do we get them to understand?
It comes down to both sides talking to each other and, understanding, developing greater mutual understanding. That's happening now in Europe. It's happening in the UK. The governments in both jurisdictions are reaching out to the industry, working with the industry to set clear rules of the road. It's happening in Dubai. It's happening in Singapore. And constructive things are coming out of it. The UK last week introduced very constructive stablecoin regulation that is really going to help with the adoption of the technology, and I think put the UK in a really strong position. The regulators here, a few years ago, we went through the crypto asset firm registration process in the UK, and it was really, really tough. And we got our license. We were one of only 5 big platforms that did, but it was a positive process. It was run very, very professionally by the regulator. They went to great lengths to understand the technology, and it was a constructive engagement. I think the disappointing thing is what we're still seeing in the US, which is sort of like a standoff. And it's a very strange situation where, you see these actions taking place and the regulator coming after crypto firms, and then they go to court, and the US court system, generally speaking, is saying, is actually defending, is actually coming down in favor of the crypto industry in many of these cases. And we've been in situations where we've seen a complaint made by a US regulator, We've gone to 3 separate law firms, and all 3 law firms says, no, the regulator is wrong on the law. I mean, that's an extraordinary situation. But I think it's getting better. I think there's some constructive draft bills now emerging in the US. There's Lewis Gilbrand and there's McHenry, 2 bills that have a lot of detail about digital assets and how they should be regulated. So my own belief is that while it may be a confusing situation at the moment, within 2 to 3 years, I think the US it'll probably come from behind and have the best rules for crypto of all the jurisdictions. Maybe I'm a crazy optimist, but I think they'll wake up to the fact they don't want to lose this technology race. And the technology is here to stay. That's the main thing.
Yeah, some friends and I were talking about, over the past year, how the U.S. is going through this process of regulatory capture. And then 2 or 3 years, they're going to say, once the regulatory capture has been complete, oh, it's okay now, you can get into it. And then the switch is going to flip overnight, and then we're going to see mass adoption.
Yeah.
Right. What do you see something similar?
No, I think the industry is still really young. I remember listening to some critics recently, and they were saying, the internet came into people's lives in 95, and there was mass adoption by 2005. The trouble is that's just not true, right? The internet was invented in 68 and reached scale in, I don't know, 2005, 2008. The point is it took 40, 50 years. And, we're very early, still very early. So I think there's a long way to go. But what's happened over the past 2 years in terms of regulatory clarity and more, at least there's some semblance now of regulatory maturity in some parts of the world with respect to crypto. That's a very positive thing. And with clear rules of the road, you'll get adoption by companies, enterprises, and so on.
I agree. 30-year cycle, they say, or 30 or 40. Yeah, makes sense. Okay, awesome. So I want to thank you very much for speaking with me today. I enjoyed this conversation, and I have one last question.
Great to meet you.
Nice to meet you too. Thank you for being here. And my last question is this: how can people find out more information about you, about Uphold? How can they learn more about Vault? How can they become customers, clients? How can they do that?
Yeah, the best way is just search us out, uphold.com, and you'll find a ton of information about us. You'll find a landing page about Vault. We have a Twitter feed, which is very active. That's got loads of stuff, or will shortly have loads of stuff about Vault. But please check us out. We're on iOS, Android, web. So yeah, come find out more about us.
Awesome. Thank you very much for your time today.
Jamil, thank you so much. Really appreciate it.